Well, hello back. Welcome back, everyone, for another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
Not much, man. How you living?
I'm doing good, man. With the government officially shut down, so
And the market said we
what
don't
shut down?
care.
What shut down? What
What
are you
shut
talking
down?
about? It's crazy though, man. It's like the last time this happened was also in during President Trump's actually when he was in the office. I think last time, yeah, I think last time he
I
was in
think
office, the
the
shut
first
this
term, yeah.
yep. The federal government also shut down also again. But I mean, overall, man, like the market, like yeah, we're just gonna keep going. Like, what are you talking about? S&P was up like 0.3%. Dow Jones was like up about 0.1%. Nasdaq, I see Nasdaq. Like if you guys see NQ and S&P pre-market, that thing was moving, man. Even the Russell was up a little bit. Like, so despite all of that stuff, man, market was like they shrug off all of that craziness from the shutdown. Yesterday we seen the market pull back a little bit, but yeah, nothing really happened, man. The dip just got bought up like crazy, you know? So, but with the US government officially shutting down today, there's about 750,000 federal workers, employees that got furloughed. They basically don't have, I mean, they might be working, but they're not getting paid, basically. But that's basically what's happening, right? So, one major key consequence is the key economic data, like the full September job reports, that might be impacted or delayed because of this, because those numbers might sway those numbers a little bit, down, up, depending on, which number you're looking at. But, that 750,000 people, that's a lot of people to be added to the job numbers for September. So, overall, man, talk to me, man. What do you think about what's happening in the market right now based on what's going on? Because I was shocked. Like, I was shocked that we actually got people buying. Like, nobody, there was no like a crazy sell off that we know that people thought is going to be.
So for me, I was actually surprised too because I was actually surprised yesterday because when I started to see how the market closed yesterday, as the probability of a shutdown increased, as you kept hearing that they're not going to get it, they're not going to get anything done by midnight. You saw the close of yesterday's price action was very strong. There were a lot of buyers coming in and to close yesterday. So going into today, I told my group, I was like, I would not be surprised if this dip eventually gets bought.
Right.
And that's exactly what we saw today. And I think what the market is saying is you've been telling us that the jobs market has been slowing down for the last, what, 4, 5, 6 months? I
Mm-hmm.
don't think that we're going to hear anything new in this next job report. So I think they just basically shrugged that off.
Right.
Now,
Right.
with the federal employees not being able to get paid or have work, we're in the fourth quarter of the year. The one statistic that may get affected is maybe consumer spending.
Mm,
Maybe that takes a dip in September because I mean, what happens usually in the fourth quarter is just when everybody does all their holiday shopping and all that, stuff. And
but
that
even that's still doubtful too. It's like
correct.
I don't even know if anybody can be spending a lot of money this holidays.
Man, to me, people will cash advance and put stuff on their credit card. Like to me,
I hope not, man.
to
I
me,
really hope
people
not.
people will overextend themselves just to say that they did this and they did that. Trust me, I've
That's
seen it.
crazy.
So
That's crazy.
I wouldn't be surprised if it continues because now if people are less, if let's just say this government shutdown extends, let's just say a month, right? That to me could slow down consumer spending, which is another reason why I keep saying I'm staying away from B2C companies right now because a lot of people could be affected by this government shutdown. Now, there are certain institutions that are still running, like the Fed, they're still going to have to do their job. But you
Yep,
got
yep,
like
yep.
national parks and national monuments and other things like that that may not have employees. You got, possibly military people that are, not being paid right now. They got to work for free and things like that. So we'll see how it affects the overall consumer spending. That would be something that I would pay attention to.
Yeah.
But when I look at like private sector or B2B, I don't see this being a big
It's not gonna
deal
impact them.
overall.
Yeah,
I don't.
yeah,
I don't.
yeah.
So, I call them clowns. If the clowns in Washington want to keep running the circus and pointing fingers and not getting stuff done, so be it. So be it.
That's crazy, man. But I think overall, like I think yes, it'll be interesting to see how this impact the next, major reporting, and also like this is the last quarter, like you
That's
said
the
with
last
the
quarter,
holidays,
correct?
yeah, with the holidays and all that stuff. I don't know, man. I hope if you listen to this, I hope you don't take credit card debts and cash advance and all the stuff to buy your kids or whoever you need to buy gifts and all this stuff. Please don't do it. Like it's not worth it. You know what I mean? Go take them out. Go for a walk at the park or something. I don't know. I know it's hard, but
Or
if you can't afford it, don't do it.
or buy them some Aklo.
Something. They might not like you right now, but
Yeah. We live in a consumption economy.
oh, it's just
I
crazy,
am I am
man.
pretty sure that that is not gonna stop people from doing what they feel is necessary. And like I
Mhm.
said, everybody got a choice to make. It's completely up to you. But I would be surprised if we saw a significant dip in consumer spending. I would be
Mhm.
very surprised. I don't think it will happen. If we see a dip, I think it will be modest, but we'll just have to wait and see. But yeah, we'll see if they'll figure it out. I'm not optimistic that anything will get done in the next week or so. I think it could
Yeah.
extend. I think if you ask me how long this thing could extend, I'd say minimum at least 1 week. Hopefully it
Yep.
doesn't go past that, but
Yep. Yep.
we'll just
Yep.
have to wait and see.
It's all about leverage. Somebody's gonna get something and somebody needs to agree to it. That's
Yeah,
all what this shutdown always come down to.
yeah.
It's all about leverage. You got something I want, or you want something I need. So it's like
Hmm.
let's make a deal. At the end of the day, it's not about us, it's about them getting what they want.
Yeah.
Like,
So let
yeah.
them let the clowns run the circus.
Yeah, they're going to keep doing it. But man, I was the one earning that shocked me today was Nike. Like I was looking at that chart, I was like, the hell is going on? Who's what? The tariffs and all of that, and Nike still ran up, and they made money. This what happened? But
Yeah.
it's crazy, man. Nike overall reported earning per share EPS of 0.49, which is well above the estimate. I think they estimate like 0.27 or something like that. I mean, that thing was up. Their revenue came around $11.7 billion year over year. That's about an increase of about 1%, right? So I was kind of shocked, man. Like North America sales grew by 4%.
Hmm.
China surprisingly fell. Sales fell about 9 to 10%, so which makes sense. Wholesale channel was a bright spot. The revenue rose about 7% there.
Okay.
Their Nike Direct, which is their digital products, didn't really do well. And I didn't think they owned Converse, but the Converse brand
Yeah.
actually fell down by like 27%. So
Yeah.
I don't know where they're getting their money from. I don't know. Like, where's that money coming from? Where's that revenue coming from?
One of the things that I will say is I think the Converse acquisition was a bad acquisition.
Mm,
I think it was a bad acquisition. Um, if I were Nike CEO, I would spin that off as a separate company entirely. I would spin that off because the classic Converse brand and the shoes, you don't those are long gone now. Those
yeah,
are long
yeah,
gone. I
yeah.
would I would spin that off. Now I will say this. After 5 consecutive quarters of declining sales, this is a bright spot.
Hmm?
But I will say that I am not impressed with a 1% revenue growth year over year. That
Not at
doesn't
all.
that doesn't impress me. Now,
Not at all.
will they continue to build on that? It's possible, right? So 1% is better than negative. So at least the ship is being steered in the right direction. But to me, they have a long way to go. I'm
Yeah.
mad because again, when that stock was at like $55, I was thinking about taking a flyer on it, but I didn't. I was just kind of like, I'm gonna just let this one ride. And now it's at what's Nike at now?
74?
70, let's see. Yeah, 74.20. So that was a pretty big move. Now, if you look at how it traded though, you can see that there's a long wick on that at the bottom.
Mm-hmm.
So it found support at the 200 exponential average, and
Yep.
closed above that for the first.
Some buyers, yeah, some buyers came in.
Yeah, so they bought at that level. So I think that we could possibly, I think there's a gap that needs to be filled all the way to 77. Yeah, it could possibly start trending in the right direction.
Hmm.
Um, but I will say from a revenue standpoint and a growth standpoint, I'm not I'm not overly impressed with how the stock with those numbers personally. But
Yeah.
I think in this market environment where there's a lot of stocks that are at like all-time highs now, I think value managers are probably looking for some long-term value stocks and value buys. And I think I would put Nike on that list. So if I'm a value manager and I'm looking for things that might be undervalued or cheap that I might want to hold for the next 4, 5, 6, 7 years, then Nike would be on my list. So, I think that's probably to me would be a catalyst of why Nike did well today. Because if you look at the data, I'm actually surprised. Man, there's a lot of fund managers that are trailing the benchmark
Yeah.
because
Yeah.
they didn't deploy any
Yeah. When
cash when the
exactly.
market dropped in April. Now, I will say this though, the effects of tariffs on inflation. I am I was wrong about what would happen. I thought there would be a bigger impact. So whatever businesses are doing to not see a huge impact to the consumer on the CPI side and the PPI side is commendable
Mhm.
because I really thought that tariffs would hit harder in some sectors, but it didn't.
Yeah. Yeah.
So I am actually impressed. That's one thing I will say I was wrong about. I really thought that we would see higher inflation, but for some reason it has been fairly muted.
I don't
Has it
know,
gone
man.
has it gone up? Yes, but it's been fairly muted.
Yep.
I don't know how long this will continue, but so far so good. So I was definitely wrong about that.
I don't know, man. In my opinion, I think somebody's still playing with the numbers a little bit. Somebody's messing with the numbers, and also a lot of companies gonna prepare, right? They prepared way ahead of
That's
time. I
true.
think
That
I
is
think
true.
last year
That
a
is
lot
true.
of people buying inventories
And
before
first
the.
quarter of the year. Yeah,
Yep.
first quarter of the year. Yeah, lots of
Yep.
imports. Yep, you're
Yep.
absolutely right.
So
You're
there's a
absolutely right.
lot. So they might have stocked up a little bit. They might have just raised the price just slightly a bit to make up
Yeah.
for some stuff. But
Hmm.
yeah, I don't. I think a lot of people kind of stocked up on goods and all that stuff for the long term. So yeah, but yeah, it is what it is, man. I feel like maybe we're not seeing it because the time is not here yet, or maybe like you said, they might have figured a way to not sink the ship by taking on the tariffs and stuff. But yeah, we shall see, man. Another interesting news, man, the EA takeover. I mean, $55 billion to take him private. Like that is a crazy number. That is like I think that's like the record deal so far. Like nobody have ever went private for this amount of money before.
Yeah. They said
You
that
know what I
that's the
mean?
biggest leverage buyout of all time.
Which is crazy. So it's like I'm trying to figure out what the heck, what do they benefit by going private, first of all? And second of all, like what exactly are they gonna be working on that's they don't need the public to have an eye on in terms of like the numbers in the books and all this stuff, you know? So
So one
that's
of
gonna
the
be interesting.
Yeah, so one of the things about being a private company is you don't have to give quarterly reports.
Mm-mm.
That is not a mandate. Um, you also the one thing you do lose with going private is you do lose some liquidity, right? Because with public markets, you always have buyers and sellers every
Yeah,
single day. In the private
yeah,
markets, you do lose liquidity. But while you're trying to restructure, right? While you're trying to, increase the valuation of the business, um, and sometimes I will say this, sometimes private companies get real creative with what they're reporting.
yeah, yeah.
Some of the standards that you have for reporting certain numbers are not the same when you're private compared to when you're public. So what I think is trying to happen is I really think that they're gonna go private. They're gonna do some restructuring and maybe make some changes. It would not surprise me if they come
It's a
back public
comeback.
because
Yep.
that's what a lot of companies will do is they'll come back public and then once they get a liquidity event, all of the investors who invested while the company was private, they can start exiting their positions. So
That's yeah. That
Yeah,
that that actually makes sense. That
yeah,
actually makes sense. So that 55 billion probably gonna turn into like a few hundred billion by the time they come back
it's
to
possible
the market.
because I think Dell did the same thing years ago, where
Mhm.
they were public, went private, made some changes, restructured, and then came back as a public company.
Yeah, I won't be surprised. I mean, shareholders said they will receive $210 per share in cash under this transaction. This is a crazy premium because how much were they trading over before they went public? How much was that? EA.
You know that Saudi money is long.
Yeah. So before the announcement, I think they were trading at like 160, 170.
Yeah,
Damn, they got paid
yeah,
like $210 per share.
yeah.
And
So
depending on how much you paid for it originally, like you made, yeah, you good, man.
so yeah, the buyout price for shareholders is 210 a share. So if you are a shareholder and you, let's just say you held it at the 169 level, you are getting a nice premium for your shares.
Yep,
So,
yep.
but we'll see, man, because with me, the EA brand, Madden and FIFA to me are the
That's the
big
that's the biggest
drivers.
ones. Yep.
Yeah. So, I don't know what the Saudis see long term in the business that can help it grow more, but what do I know? So,
I mean, like you said, they might have a plan to like, take it private, do whatever they need to do, and then bring it back up again, and
hmm
everybody will cash out and they'll be happy. I'm just surprised, like, why that company in particular? You know what I
yeah,
mean?
yeah,
Is it for their data? Because there's a lot of people all over the world who
hmm
use EA Sports to be able to do all this different stuff. So I don't know. It'd just be interesting to see like exactly um what the plan is.
yeah.
You know.
Because to
So
me, gaming is not, I don't know. I don't know if what the long-term trajectory is for gaming companies growth-wise. Like I really don't know. Would that be a business that I would invest in that I would say that has a lot of growth potential? Not right now, but
never know, man. They might start using those for what is this thing called? For the armies to be able to train on drones and stuff. You know, you never know. They
that's
might they
true.
might they might start militarizing their stuff. So oh man, that's crazy. But
Yeah.
yeah, let's move on to this AI spend, man. So I was actually reading about this. Like Gartner expects global AI spending to reach about $1.48 trillion, and that's in 2025.
2025?
Like this year,
Sheesh.
and expected to exceed $2 trillion in 2026. That is a crazy, crazy amount of spend. I mean, and it's just gonna get bigger from there. You know what I mean? So I think we really did hit it in the head when we said like the B2B
hmm
business is very, very important and is growing. The
Yeah.
amount of money actually flowing through there is ridiculous. You know? So yeah, let me get your feedback on that one because that's a crazy number, man.
So today we usually do like a stock analysis of an individual company, but what I'm going to do is just kind of give a breakdown of why I feel that the AI spend could continue. Um, a lot of people are saying bubble, we're in a bubble. This is like 99, blah, blah, blah. And I kind of understand the rationale behind that, but I
Mm-hmm.
want everybody to sort of look at the hard data to kind of look at where is the money coming from that these companies are spending on AI. And that is the important thing that we need to take a look at.
Yep.
Remember, what drives stock prices is earnings, future earnings. That is what drives stock prices.
Mm-hmm.
And if we look at the earnings for a lot of these top companies, the earnings have been pretty good. And as some of these companies start to spend more on I will say this, hopefully they see return on their investments and they get more efficient, which possibly could lead to um, smaller workforces. Smaller workforces with more efficiency could increase profit margins. So let us take a look at some of the top 5 companies out there and see Does it make sense that this AI spend is feasible? So I'm going to start with sharing my screen, and we're going to start with NVIDIA because NVIDIA is um, the head honcho of this whole AI spend. So let us jump into NVIDIA. So, all right. So one of the things that I like to look at is the cash flow of these businesses and the growth of these businesses. And I'm looking at the annual income statement from NVIDIA. So the first thing we're just going to look at is revenue. So if you look at NVIDIA's revenue over the last 5 full years, going back to 2021, let's just look at the growth. 2021, 16 billion, 2022, 26.194 billion, 2023, 26.97 billion. Then you look at 2024, that jumped by 125%. Then you look at 2025, January, it jumped by 114.20%. And then so far through this quarter, when we look at the TTM means trailing 12 months, $165 billion. So you see, even though the revenue growth has slowed down, to me, that's 77.15% revenue growth over 12 months is still very, 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 very good, in my opinion. Now, one of the things that I want to look at with NVIDIA is now a what, $4.5 trillion company. Let's look at cash flow. And if we look at free cash flow, look at how this free cash flow has grown over the last 5 years. 4 billion, 8 billion, 3 billion, 27 billion, 60 billion, $72 billion. So this is NVIDIA. So let's write that number down, $72 billion. So what free cash flow means is that at the end of NVIDIA's operations, they have $72 billion in excess cash every year that they can reinvest into the company. That is ridiculous. It's crazy. $72 billion in free cash flow. So that means that they don't need to go into the debt market or borrow money to grow the company. So that's one company that is driving the AI spend or the AI, build out. Let's look at the second biggest company, Microsoft. So Microsoft, we're going to look at the income statement. Let's look at Microsoft's revenue. Not as big as NVIDIA, but we've got 168 billion, 198 billion, 211 billion, 245 billion, and now 281 billion. Now, Microsoft's revenue growth has been fairly modest in comparison to NVIDIA. Now, remember, more companies are dependent on NVIDIA for growing their AI buildouts. Let's just make that very clear compared to Microsoft. So NVIDIA is a very, very, very important company, which is why you can kind of see that their growth was a little bit more explosive. I would say that they're kind of like the foundation of a lot of the AI buildout that we're seeing today. Those Blackwell chips and their GPUs and everything that they're building in these data centers, a lot of people are dependent on NVIDIA. Let's look at Microsoft's free cash flow. So let's go to the income statement. So Microsoft free cash flow, let's see. Okay, free cash flow for Microsoft, $71 billion for the last trailing 12 months. So through the quarter of June 30th, 2025, $71 billion in free cash flow. So again, now that's a little bit down from where they were in 2024. But again, Microsoft has $71 billion that they can do anything with at the end of each year based on how they're operating now. If AI makes them more efficient, it is possible we could see this number continue to grow. So
Mhm.
between Nvidia and Microsoft, this is just two companies. We have $143 billion annually in free cash flow. That's a lot of money. Now, let's look at Apple. Apple, another mega cap company, we look at their revenues. Now, I'm sure Apple's revenues, now they're a hardware company. So their revenues to me are going to be a little bit more modest. But over the last 5 years, you got 274 billion, 365, 394. We see a drop in 2023 in 383, slight increase to 391 in 2024. And then so far through this year, $408 billion annually in revenue. Not
Crazy.
as not as much as Nvidia, but you can see that the growth of their revenue is still there. So, but not as hyper explosive as Nvidia. Now, let's look at Apple's free cash flow. Apple's free cash flow is $96 billion. Let me say that again. Apple's free cash flow is $96 billion,
That's ridiculous.
which is absolutely crazy. So again, if Apple is in the growth stage or they're looking to invest more into the business, they definitely have the assets to do so. If they want to invest in AI, if they want to invest in, maybe buying another company or things like that, 96 billion in free cash flow. So let's write 96. So we've got 72, 71, and 96 billion in free cash flow. All right. Let's look at Google. Google's another company that is powering this AI build out. And if we look at Google, very robust revenue growth, 182, 257, 282, 307, 350, 371. So again, compared to NVIDIA, I will say this is very modest, very, very modest revenue growth, right? But consistently growing over the last 5 years, which is impressive. Now, let us look at free cash flow. Does Google still have money to continue to invest in growth? Google's free cash flow, 66 billion. $66 billion in free cash flow. All right. So now we've got Google at $66.7 billion. All right. Now let's look at Amazon and then Meta, but I'm going to look at Meta first. So Meta is another company that has had consistently good revenue growth, 85 billion, 117 billion, 116 billion. So a little bit of stagnation between 2021 and 2022, 134 billion, 164 billion, and now 178 billion. So again, fairly consistent revenue growth. Now, I will say this, over the last 5 years, the revenue has pretty much doubled, which is impressive, in my opinion. And if we look at free cash flow with Meta, Meta's free cash flow is about 50 billion. Now, Meta, I will say, now to me, Meta could have higher free cash flow, but I know that their Reality Labs, they're burning through a lot of cash. And even with Reality Labs, with burning through all that cash with Reality Labs, they still have $50 billion in free cash flow on a trailing 12-month basis. Pretty impressive. Let's add that to our list. So that's 50.1 billion. Okay. Now, I'll look at Amazon. Amazon, let's look at their income statement and look at their revenue growth. 386, 469, 513, 574, 637, and 670. So again, fairly modest revenue growth. But if you look at the bigger picture over the last 5 years, from 386 to 370, that is very, 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 very impressive over a 5 year period. Let's look at their free cash flow. 13 billion. So not as robust as the other companies. And I will also say with Amazon, their business, to me, their margins are probably not as good as the other companies because Amazon, I wouldn't say that the Amazon retail space where they ship products to people and things like that, to me, that's not a high margin business. Their high
Okay.
margin business is AWS.
Yep.
So to me, their based on that business, and they also have Whole Foods and things like that. To me, those are not high margin businesses. So that is to me one of the reasons why their margins are not going to be as robust as the other names. But so far, they're still free cash flow positive. So if we do the math on this, 13.4 billion. Let me bust out my calculator and let's do the math on this between the top, let's call it the Magnificent Six. 72.0 plus 71.0 plus 96.1 plus 66.7 plus 50.7, no, 50.1, excuse me, plus 13.4. So on an annual basis, between the top six companies in the S&P 500, you have free cash flow of $369.3 billion on an annual basis. That is very, 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 very staggering. And I'm not saying that all of them are going to spend that much money on an annual basis. Let's just say they spend half of that. Let's just say 150, 160 billion a year. That's just six companies spending 150 or 160 billion dollars a year on the AI build out. And we know that there are other companies that are also going to be spending money on AI build out that we didn't even talk about. I just looked at six companies. So,
Mhm.
with that being said, you can't compare this stage of the AI build out to the 90s when you had companies that typically just didn't have any revenue, didn't have any product, and the top six companies in the S&P are pushing 370 billion in free cash flow. Free cash flow is a
Yep.
very, very important number to me for large companies because it gives you an idea of, okay, after they've kind of spent money on their operations, on paying their employees, blah blah blah, that's how much money they have to invest in the business.
Mhm.
That could be buying companies, that could be paying back down debt, that could be buying stock. $370 billion in free cash flow. None of these companies need to go to the debt market to finance. Now,
Nope.
Oracle did, and they got penalized for it. Now, so we'll have to pay attention to what Oracle does over the next couple of years to
Yeah.
see if they can really hit the numbers that they said that they plan to hit over the next couple of years. But the top six companies, I mean, they're
They're
in good
good.
shape. They're in
They're
good
in very
shape.
good shape.
They're in good
And
shape.
yep. Yep.
So I don't like that comparison because we actually have the numbers to back up what is going on.
Yep. Yep.
So I just wanted to put that out there so that people can don't let the news or headlines of like, oh, we're in a bubble or oh, don't let that take you away from actually doing
Right.
your own homework and
Right.
doing your own research. Because if you just look at the headlines and you look at, oh, stocks are at all-time highs, we're in a bubble, this can't continue, blah, blah, blah. Now, the speed at which we're moving could slow down. Let's not,
Yep.
it could slow down. We've seen it with
Yep. Yep.
NVIDIA.
Yep.
Like we've
Yep.
seen it with NVIDIA. But can you consistently continue to grow at a decent rate? I think the numbers
The
say
numbers
it's,
prove it.
yeah,
Yeah.
the numbers prove it. So,
Yeah. Yeah. I think the case for I think is solid, right? Like
yes.
and the fact that those companies, the top five or top 10 companies are willing to put money behind it, it just proves that like there's something there and it's already been proven, right?
Oh, yeah.
Because at the same time, it's like if you see the top companies are moving to that and they're spending money, you don't want to be a lagger. You're like, you want to be like, all right, what are they doing? Let's see. I want to put money in there too, so we can figure out what's going on. I think that's what Oracle probably like. Oh shoot, we don't want to be left behind.
Correct.
Let's go get some more money so we can catch up to these guys that's already moving ahead of us. You know what I
Hmm.
mean? And nobody wants to be left behind. So I think that's why you see a lot of companies spending a lot of money trying to like just be the one that's in the front. You know?
Correct.
So.
Yeah. And sometimes I will say that sometimes you just need to follow the money.
Mhm.
Follow the money. And sometimes when it comes to investing and looking at where to invest, I always tell people, think about where the world is going, not where the world is.
Yes. Yep.
And even if you're going to invest in companies where you feel the world is going, right? You still need to do your due diligence behind what is going on under the surface.
Yep.
And AI makes it so easy for you to get information within a matter of seconds compared to years ago where you had to really, really, really do a lot of a deep dive and digging into these companies. And
Yep.
to me, the top six companies, and you talk about how much money they're input, to me, all of the CFOs of these companies can't be wrong. All of them wrong.
Yeah.
Like,
And it's
I'm not
double. And those are big companies too. This are not just like your.
correct, correct. Could all of these CFOs be wrong when it comes to putting their money where their mouth is?
So.
I don't think so. So, I am very animate on the fact that we still have a long runway to go when it comes to all of the potential that this build out has.
Right.
I still think that the biggest opportunity is not in just chips. I think power is the biggest opportunity, in my opinion. I think power is still
Facts.
the biggest opportunity. But
Facts.
every single component of the AI build out is not going to grow at the same pace, but there's still a lot of growth potential because the demand is still there. So,
Mm-hmm.
um, I'm still, I'm still going to be, um, if there's where I would be looking to invest long term, this would be where I would be at. If any companies are part of the build out, either they're in a hyper growth stage or they're good quality companies, those are the things that I would definitely be looking at long term. And I'm talking about investing, not trading, of where, some of these good companies have potential to move. So,
Yep. And I'll
um,
be curious, like when the internet bubble happened back in like late 90s, early 2000s, was there headlines that said like it was in the bubble? Or was it more like after it happened, then people were like, oh, that was a bubble. You know what I mean?
so to me, from what I remember very vaguely, because I was, kind of like starting high school during this time.
Mhm.
I remember that a lot of the headlines were sort of like after the fact. But I also remember that you heard of a lot of companies that didn't have any tangible revenue or any
Right.
tangible products
Right.
that they were selling. It was a lot of hype, kind of like when we had the mortgage bubble where you could have got a mortgage with no income,
Mhm.
right? To me, bubbles occur when there's no substance behind the growth.
Yes.
That's where bubbles occur. There is substance behind the growth of this AI build up. Now,
Yep.
let me be 100% clear about this. Not all companies are going to make it through this build out. There are going to be
Nope.
some companies that
Nope.
will sell you fluff and at the end of the day not have the data to back up the growth. Because I'll give you an example. UPST, right? Upstart was a company that said that they use AI to give out loans and to underwrite and screen customers. That was kind of like their mantra that they were using when they became public. Let me come on. Where is my? I really hate when Thinkorswim starts acting real slow. All right, so UPST. Take a look at UPST over the last few years. UPST was a $401 stock back in 2021.
Yep.
UPST is a $52 stock now. So again, there will be companies that will not have the substance behind the hype.
Yep. Yep.
Those are the things that
Absolutely.
you have to understand is you have as an investor, you have to really do your due diligence and look below the surface. Look below the surface to find, is this feasible or is this not feasible? And
Mhm.
if you just look at some of the stock analysis that we've done, you can go back and look at those videos and make notes of different metrics you can look at to see whether these companies are, you know, are growth companies. Does the hype warrant the growth or not? Because if I look at UPST, let me look at their numbers from a over the last 5 years. Let's look at their financials real quick. So income statement. So their revenues, yeah. So this is UPST. So this is where you see the drop off. So in 2020, they had 228 million in revenue. That jumped to 108 million in 2021. So that was a big move from 2020 to 2021. That's almost like a that's a big jump. Then in 2022 they hit about 901 million. Then you see in 2023 a huge drop off to 560 million. That's a huge drop off. And then when you look at their, let's look at their net income. Let me see. Where's net income? Oh, we're on the wrong page. Oh, this is cash flow. Oops. Go back. Gross profit, interest expenses, pre-tax income, net income to where is their net income number? I don't want net income to comment. I just want the net income. I can't find it. All right. Well, let me see if I can find it on the. Yeah.
PST.
Yeah. Okay. I see their net income. Yeah. You look at their net income. So they had positive net income in 2020. They had bigger positive income in 20. So they went from this 5 million. Yeah. I think 5 million in net income to 135 million. No, not 100. That's 135 billion. That's 1.35 billion. Then you can see they went super negative in 2022, 2023, 2024, and 20 and so far in 2025. They've gone really negative on the net income side. So that you're going to be penalized for that, right?
Yep.
You're going to be
Yep.
penalized for that because if you're trading at a premium and your revenue all of a sudden takes a huge cut and then your net income takes a huge cut, the market will penalize you.
Yep. Investors gonna pull up real quick.
Yeah, yeah, they're going to penalize you. So you can see that not every company that claims that they use AI will have the numbers to back it. So if you're going to invest in some of these companies, make sure that you jump on these earnings calls and really understand what's going on with the business rather than just turning on CNBC or looking at some Google headlines or some, Yahoo Finance headlines and then making your decisions based on that
Yep.
because that's not going to get you too far. So make sure you do your due diligence behind all of this. Now, also understand some of the risks that you're taking when you're investing in some of these hyper growth companies with Oklo, right? Oklo is a very hyper growth company.
Yep.
But if we look at their trajectory and if they look at what is sort of fueling their growth potential, one of the things that I like is if you look at the energy secretary, who is a former Oklo board member, they are gung ho with backing this company and giving them the
Yep.
resources they need for their build out. So even though we are I'd say anywhere between 2 to 3 years away from their actually deploying their actual product, I like the trajectory. And I will say this again. If I told you that Okla would be a $144 stock in 2025, I wouldn't have expected that because I went in with the intention that this was going to be a long-term, like 5-year build out. But a lot of the biggest hurdles of regulatory blockage and things like that, they've gotten past that. And the energy secretary is on board. And the energy secretary is, well, Trump's got what, another what, 3 years left?
Yeah.
So energy secretary is not going to change over the next 3 years. And I saw an article in Forbes about making a case for Oklo being a potentially $200 stock at some point because the demand for the gigawatts that they can put out with their Aurora product, there's demand for it. And they're just basically building the pipeline. They're like, we're just getting commitments from people saying, we want this, we want this, we want, and as long as that continues to happen and they can deliver, I mean, I really like where this stock could be in the next 2 or 3 years. Between all of that, there's going to be some volatility. Don't get me wrong. Again, we saw the stock get to what, 144. Now we're back down to about what, 117, 115.
170. Yep. Yep.
So we're going
Yep.
to see stuff like that from time to time. But I'm thinking long term, this is something that I want to be committed to. So yeah,
And I
I
mean, like you got to think about it too. Is like we are gonna see these, swings every now and then, right? That's gonna happen. So
mhm,
you're gonna keep getting opportunity, but you have to believe in the story that we've been saying. Like when it comes to
mhm.
energy, when it comes to all of those different things that are gonna support the AI ecosystem. Like if you believe in those, you find some gems in there, like literally really really good ones. So one of the big ones is, I guess, we keep talking about is energy. Aklo is one of them. We have a lot of ones that we mentioned, and even around that you can still look into who are the companies that surrounding that, to kind of figure out which one you want to invest in. Like I'm telling you, man, while everybody's going to be running toward the big ones, look for the entire ecosystem and find you a few that really, really, and we give you a bunch of them was it last week? Yeah, it was last week. Like,
I mean, over the last year, we've given you a bunch of them.
man, like the energy, I don't think people understand the energy that we're gonna need to even support this infrastructure. Even if just the top 5 companies decided they're the ones that's gonna be in the mix with AI, the amount of energy we need is ridiculous.
Let me also give you another reason why I believe in the energy story. So let me give you a statistic. So if you're familiar with capital markets and you've been an investor for quite some time, utility companies are usually defensive companies. What I mean by that is people invest in these companies when the market is not doing good. Like they're defensive. People buy them mostly for their dividend, not for their growth. The XLU so far this year has hit an all-time high and is up 15.71%. Let me put that in context to SPY. The XLU is outperforming SPY. Let that sink in.
That's crazy.
Let that sink in. Because utility companies are not really like growth companies. People don't invest in
No,
them for their growth. They invest in them for their dividend. That's why people tend to invest in utility companies. The
that's
XLU is
crazy.
outperforming SPY. What other sectors are XLU outperforming? Let me take a look. Let's see. Not too far behind from communication services. It is outperforming financials year to
Of
date.
course. Yep.
It is I don't think it's outperforming technology. Nope,
No.
not outperforming
Nope.
technology. And I don't think it's outperforming the semiconductor. No, no way. But the XLU is one of the top performers so far year to date, which is very rare when you see an economy or a stock market hit an all-time high.
Mhm.
And if you look at the XLU, let me just give you some of the top companies in that ETF real quick. Let me give you top five. Nextera Energy, Southern, Constellation Energy, Duke Energy, and Vistra Energy. So, yeah. So again, I don't think that people are going to pivot away from traditional power sources, right? But to me, utility growth and power demand is going to be huge over the next couple of years. So don't say I didn't give y'all nothing of value. But yeah, and there have been tons of articles about the demand for power for all of this AI data center
Articles,
build out. Yeah,
videos, like you just go look at how much energy we're gonna need to support what we have right now. So
correct. Yep.
it's gonna be interesting to see what companies actually comes out of that. And yeah,
And I
we'll
think
see.
Shane says that FRMI IPO today is a new nuclear company popping off hype. I have not heard of them before, but I will
Ooh, did pop top from 24 to 32. That's not bad.
FR, is it FRMI? Is that what I said?
Mm-hmm. Yep.
Yeah. Okay. So they just debuted on the exchange and they're already up 54.90%. So this is probably one I'll put on my watch list and do my research, but this is their first day of trading. So not a lot
Yeah.
of data that I can look at. But I will continue to monitor the landscape. But to me, I think there's a lot of growth in the power sector. So especially for nuclear power. So
Yep.
yep,
Because that's an untapped industry, right? I mean, we
yeah,
tried years ago, but there was a lot of meltdown, so people kind of like scared of
correct.
it.
Yeah.
But the
But
the amount of money being poured in there is crazy.
and I keep telling people if you have not done your research on SMR technology, do your research on SMR technology. Small modular reactors. That is the future of energy right now. So, you know, I hope that you at least took a look at it and, you know, have made the case of why it's very, very important. Yeah, Shane says that he got in an Oklo at $7, and then also URA, and he says he's up 100% on the ETF. And I remember
Shane,
yeah,
yeah,
I remember we gave away a lot of that information
yep,
back in the day about
yep,
where to look for nuclear power.
yep, yep, yep.
So so yeah, just know where to look, man. Know where to look. So
That's
and
that's it. Or listen to us.
or listen to the
I'm
suggestions
just
that
saying,
we're
man, just or listen to us.
yeah,
Like, just listen to us, man. And if you don't like it, go do some more research. Like we don't kind of like force you to go one direction, but we at least give you the thesis behind it.
yeah,
So you
we'll
can
give
kind
you
of
a
go,
thesis behind it. Yeah.
yeah,
There's a method to the madness. And
yes.
like I said, if you join our group, I tend to put in a lot of detail behind the reason behind why certain industries or certain companies have the potential to move. Now, I'm not going to sit here and say that I'm always going to be right. Don't don't think that.
Yeah.
But in most cases, when you start following where the money is flowing and you start seeing where things are starting to move, that is usually your signal behind whether or not this is something that's viable or something that has potential to move. So
Yeah. Yeah.
yeah, I will close with those remarks.
With that being said, man, like if you look at next week, I mean, we don't really have the only thing I'm keeping an eye on is actually two things. Consumer credit report is coming up for the month of August, coming up next week, Tuesday, October 7th. And then on Wednesday, we have the FOMC meeting minutes. So they're gonna
Okay.
release the minute on
From the
Wednesday.
last meeting, yeah, from the
Yep.
last meeting, yeah.
Yeah. But other than that, we don't really have crazy things happening except for this shutdown. I think once, I mean, honestly, the way the market kind of shrugged the shutdown today,
Oh
I
yeah,
don't, I don't see us doing any rally, even if they say, yeah, we're gonna be open. Like the market just shrugged the whole
yeah.
thing off. You know what I
I don't
mean?
I don't
So
think I don't think the market cares about this whole shutdown thing.
no,
Yeah.
no,
I think today was evidence that they don't care. Now, if it starts to drag on longer than people expect, maybe we start to
yeah,
see some, ruffling of feathers. But again, every time what I like to personally do when I see headline news and everybody's talking about, oh my God, this could happen or this could happen, Go to the bond market, start looking at the bond market and seeing if
See
there's
what's happening
anything
there. Yeah.
crazy going there. You start seeing corporate bond spreads and treasury spreads start to widen out, then that could be a red flag. But at least for
Mm-hmm.
now, we haven't seen that just yet. So for me, I don't think anything catastrophic is down the road, right? Could we see consolidation? Could we see
Yeah.
some
Yeah.
choppiness? Yeah, potentially. But that's not a that's nothing that would scare me out of this market or that would scare me and say that this rally can't continue. Now, we are in the fourth quarter. Fourth quarter earnings are going to start coming out. If there is any red flags with like revenue growth and EPS growth and all that stuff with some of these big
Yep.
companies, we
Yep.
could see profit taking. Let's just
Yep.
that's that is a potential. We could see profit taking if we don't get good numbers from an earnings perspective from the top six companies that I gave. I wouldn't even say top six because I would kind of exclude Amazon from that number.
Mm-hmm.
Amazon has gotten to a point where if they're good or bad, they don't really move the market as
They
much
don't move on
anymore.
much. Nope.
No, it's
Nope.
mostly the Apples, Nvidias, Googles, and Metas that
Yep.
tend to really be the companies that start to move the needle. Amazon doesn't necessarily move the needle as much anymore. So, yeah, let us continue to wait for the data. If the numbers keep supporting the growth, I have no reason to sit here and tell the market that there's a sell off coming. So I've seen some people send me stuff on Instagram with people trying to predict a recession or predict something catastrophic over that's going to happen over the next couple of days. So far, everybody been
Nah.
wrong. Everybody been wrong.
Nah. And that crazy happening, guys. Like I'm telling you guys, there's a lot of people invested in the stock market that if something happened, you better be ready to buy. That's all I'm saying.
And I will also say this as well. If we get a major pullback, let's just say we get a
Ooh,
major pullback for any reason, remember there are tons of fund managers that are sitting on
money.
cash.
Yep.
They're chasing the market right now. So
Mm-hmm.
if we see a pullback of significant magnitude for whatever reason, I don't know what that reason will be. I'm not Miss Cleo.
Call me now.
If we see a pullback, I guarantee you a lot of those fund managers are gonna say,
They're gonna
"Mhm,
deploy.
deploy."
They're gonna deploy.
They're
Deploy
gonna
everything.
deploy.
Go if you go borrow some.
Yeah,
Let's you know what I
they're
mean?
they're
So
gonna deploy. They're
yep.
gonna deploy. So
Yep.
keep that in mind that there is still fuel, potential fuel, even if we see a pullback.
Yep.
So
Yep. Yep.
I'll leave it. I'll leave it at that. But and we're in a rate cutting cycle right now.
Listen. Yeah.
I have no objections that something bad is gonna now. I will say this as well. We always have the threat of global conflict that you can't predict, right? So we don't know what's going to happen. If
Right.
let's just say something happens out of nowhere, that's always a potential. But if you look at it from a macroeconomic standpoint, so far so good. And you know, I don't think that anybody should be sitting here calling doom and gloom. I think Ray Dalio has been talking about doom and gloom for the last couple days. And I
Yeah.
also think that is it UBS or HSBC who put a recession odds at 93%?
Yeah.
I don't know who it was. It's one of those two. Um, Again, I don't know what they said the catalyst will be. Just remember, anytime you have a
You got to
uh,
know the reason. Why is
you
it
have
gonna
to
happen?
there has to be a catalyst.
Yep.
There has to be a catalyst.
Yep.
So far, there's no catalyst in the pipeline, at least for now.
For now.
But that could change. And
Yep.
if it does change, just all you need to do is just know where to look for opportunity now. So
Mhm.
be ready to deploy when the opportunity comes.
Yeah. Well, with that being said, man, we did a lot of recap today. Like even though with the government kind of shutting down and all that stuff, the market, like I said, it just shrug everything up. Like all the indexes is pretty much closed higher. If you go look at pre-market right now, NQ and SQ and ES, they're green. Like nothing crazy happening. Now, like while I say something might change, but as of now, everything kind of looks to be heading, to another all-time high and all that stuff. But again, overall, man, we always, as we always say, we always appreciate you guys showing up. The people who show up with us all the time, we appreciate it. please don't forget to follow. Don't forget to follow, subscribe, and share the podcast so you don't miss any updates. So until next time, I'm Billy Clement. I got Wale with me. Yeah, guys, have a good night and be safe out there.
All right, everyone, take
All
care.
right, see y'all.